All right, kicking off today's deep dive, we're taking a closer look at the ups and downs, and believe me, there have been a lot of them in the Chinese stock market, particularly their A shares. You've sent in a whole bunch of articles and social media posts about it, so we're here to break it all down, try to sift through the noise, and get to the heart of what's really going on with all this volatility.
And I think what's really got everyone's attention is how quickly things went from, well, booming to busting. This wasn't some gradual decline. It was like hitting the gas and then slamming on the brakes, all fueled by, government stimulus packages and this idea of a guaranteed bull market, which, let's be honest, is pretty enticing, especially for new, younger investors just dipping their toes into the market for the first time.
Yeah, it's like everyone's suddenly an armchair Warren Buffett, except instead of studying annual reports, they're glued to trading apps and online forums, hoping to strike it rich. We've seen some pretty wild stories, people putting everything they have, even taking out loans, all on the promise of fast money. And then, just as quickly as it surged, the market takes a nosedive, leaving a lot of people, well, holding the bag.
That's the crux of it. The speed at which this all went down is what's got people talking, and for good reason. You've got this wave of inexperienced investors, many of whom jumped in because they were afraid of missing out on what they thought was a sure thing, and now they're left wondering what hit them. It's like that old Chinese saying about the is, the leaks.
Okay, full disclosure, I've heard that term thrown around, but I'm not totally sure I get it. What's the connection between leaks and all of this?
So, or leaks, it's basically a metaphor for investors who keep getting, for lack of a better word, cut down by the market. They invest, they lose, they try again, they lose again, kind of a vicious cycle. And the thing is, there are some pretty deep-rooted issues that might be making this whole leak effect even worse.
Issues like, what kind of things are we talking about here?
Well, a lot of the sources you sent in point to a lack of transparency, like the way some of these companies are run, their corporate governance, it's kind of murky. Plus, there are these whispers about companies not being totally honest with their financial reporting. And then, of course, there's always the chance of straight-up market manipulation. All of this just makes it incredibly difficult for regular investors, especially those who are new to all of this, to really know what they're getting into. It's a recipe for disaster.
Yeah, it sounds like trying to solve a puzzle where the pieces keep changing shape. And then, on top of all that, you've got the Chinese government stepping in, trying to paint a rosy picture even as the market's tanking. It's like, who do you trust?
Right, and it's not just the positive spin they're putting on things. There have been reports of them actually censoring any news or social media posts that contradict their whole everything's fine narrative, which, let's be real, just makes everyone even more suspicious.
It's like trying to put out a fire with gasoline. It just doesn't make sense.
Yeah.
And meanwhile, while all this is going on, you've got these big-time institutional investors, both in China and overseas, who seem to be using this whole roller coaster to their advantage, like they're cashing out at the perfect moment.
That's a great way to put it. It's like you've got two separate games happening at the same time. You've got these everyday investors, often driven by emotion, that FOMO, fear of missing out we talked about. And then you've got these institutional players with their fancy algorithms and deep pockets who are basically playing chess while everyone else is playing checkers.
So the little guys scrambling to keep up, and the big guys are just, riding the wave whether it's going up or down.
Exactly, and that's where things get really concerning because it creates this huge power imbalance. Individual investors are stuck trying to make sense of all these conflicting signals. The government saying one thing, the market doing another, the allure of easy money versus the very real possibility of losing it all. It's a minefield out there.
And in a minefield, it's usually the people who don't know where the mines are buried who get hurt.
Sadly, that's often the case. And the thing is, it's not just about numbers on a screen. It's about real people. We're talking about people's savings, their dreams, their livelihoods. Some of these stories are heartbreaking.
Yeah, it's a sobering reminder that for every stock ticker, for every percentage point that goes up or down, there are real people whose lives are being impacted, for better or for worse. It's easy to get caught up in the numbers and the jargon, but some of the stuff you send through, it's pretty intense. People aren't just talking about losing money. They're using words like harvesting, blood-sucking, even massacre. It's raw.
It is. It really shows you just how much this volatility has shaken people up. There's this feeling, especially among those who got hit hard, that the whole system is rigged against them, that they were lured in with promises of easy money only to be hung out to dry. Whether you agree with that kind of language or not, it definitely tells you something about what's at stake here for people.
Like they walked into a casino and nobody told them the house always wins.
Hmm?
And, speaking of playing the game, let's talk more about these institutional investors. It's like they're not just playing by a different set of rules, they're playing an entirely different game. Because while a lot of these everyday investors are getting burned, some of these institutional players, they might actually be coming out ahead in all this.
Yeah, that's a crucial point. They've got access to these super complicated strategies and tools that most people have never even heard of, let alone have the means to use. Take short selling, for example.
Short selling, refresh my memory. How does that work again, and how does it tie into all of this?
So basically, short selling is like betting against something. You're borrowing shares you don't actually own, selling them at the current price, and then hoping to buy them back later when the price drops, to return to whoever you borrowed from. The difference is your profit.
So the market tanks, and they actually make money.
Pretty much. And it's totally legal. But it's not something you just jump into blindly. It takes a lot of knowledge, a high tolerance for risk, and of course a good chunk of change to get started, which most individual investors just don't have. But it goes to show you there are ways for these big players to come out on top, even when everyone else is freaking out.
It's like they have a secret weapon, and they know how to use it. And it's not just these complicated strategies, is it? I mean, we're also seeing a lot of these company bigwigs, CEOs, big shareholders, whatever, using this whole downturn at a chance to sell off huge chunks of their own stock.
Absolutely. It's what they call information asymmetry. Those in the know, well, they often have a much better understanding of how their company is actually performing, potential risks, future plans, all that, stuff that hasn't been made public. So when they start bailing, selling off tons of their shares, it should set off alarm bells for everyone else.
Like a canary in the coal mine, except instead of keeling over, it's flying off to a private island with a suitcase full of cash.
That's one way to put it. And the thing is, the fallout from all of this, it goes way beyond the trading floor. People in China are definitely feeling anxious. Jobs are on the line. People are worried about the future, holding off on spending. Uncertainty breeds caution.
It's not just numbers on a spreadsheet. It's people's lives.
Yeah.
It makes you wonder how much trust is left in the system, especially with the government trying so hard to control the narrative, to tell everyone everything is fine while it's clear that it's not.
It's a tough spot to be in, both for the government and the people. On the one hand, they want to project stability, control the message. But on the other hand, the market has a mind of its own, and that creates a lot of anxiety, a lot of what-ifs that are hard to ignore.
It's like we're watching this high-stakes game unfold, right? With different players, different rules, and some people are winning, some are losing. And it's not just China that's paying attention. The whole world is watching this, wondering what's going to happen next, how it's all going to shake out for the global economy.
Yeah, and that's an important point. What happens in China doesn't stay in China, It's all connected. The performance of their stock market has a ripple effect. It influences everything. Currency exchange rates, the price of oil, gold, you name it. It even affects how much we pay for stuff, for everyday goods and services all around the world.
So even if you're not directly invested in some Chinese company, you're still going to feel the effects, whether it's your retirement account taking a hit or the price of a new phone going up. It's a butterfly effect thing.
Exactly. And we're already seeing those ripples. Investors everywhere are glued to their screens, watching how this unfolds in China, especially those who have money in Chinese companies listed on the U.S. exchanges. When one market gets jumpy, the others tend to follow suit. It's interconnected.
It's all a delicate balancing act.
Yeah.
So let's bring it home, the so what of all this. If we step back from the day-to-day ups and downs, all the financial jargon, what are the big lessons here? What should our listeners take away from all of this, regardless of where they live, how much money they have, any of that?
I think it boils down to a few key things about investing, really. First off, there are no guarantees, right? Every investment has risks. You could win big, you could lose it all. Understanding those risks, both the good and the bad, that's crucial. That's step one.
No more falling for those get-rich-quick schemes that pop up like mushrooms after the rain whenever the market's hot.
Right. Recognizing those for what they are, that's key. And that leads to the second thing, being wary of hype. It's exciting when things are going up, but remember, what goes up must come down, especially in a market as unpredictable as this one.
Don't let FOMO, that fear of missing out, make you do something you'll regret later.
Couldn't have said it better myself. And finally, and this is important, don't put all your eggs in one basket, diversify. Spread your investments around, different types of assets, different industries, different parts of the world even. That way, if one thing goes south, you're not left empty-handed.
So, to wrap it all up,
Yeah.
Be skeptical, do your homework, know the risks, and spread your bets. This isn't just about the Chinese stock market. It's about being a smart, informed investor, period.
Absolutely. This whole deep dive into China's A-shares, it's been a wild ride, periods of crazy growth, sudden crashes, and it just highlights how interconnected everything is. And by unpacking these events, talking about the wider implications, and giving our listeners some key takeaways, hopefully we've given you the tools to navigate this crazy world of finance with a bit more confidence, maybe a little less fear.
Knowledge is power.
Yeah.
Right. And when it comes to the stock market, which can feel like a roller coaster sometimes, understanding what makes it tick, that's how we all become better, smarter, and hopefully richer investors. Thanks for coming along for the ride, and until next time, stay curious.